Hey there everyone, hope you guys are doing okay. Today is October the 8th, it's Thursday. I want to provide a brief update on the dollar situation. It's kind of bad, hate to say this, but we have basically broken a key support point of 76 on the USDX. And for those of you who are not that familiar with chart terminology and things like that, you have support and resistance levels, and this is what traders look for, and the technical level is 76, and what that represents and why 76 is so important is because, and I'll post the link here in the sidebar, 76 was an important level because back in, and I'm looking at the chart here, back in around October last year, shortly before October, somewhere in August, we had the beginning of the last rally for the last major rally for the dollar. So if you look on the chart, that was the last time we had that point happen. So we had a sharp decline, hit 76, and then it shot back up in around August of 2008. So traders would look to that level and you'll hear the terms test it, right? It'll test the 76 mark. So as it kind of bounces on the 76 mark, it's called testing the mark. So once it hits 76 and it bounces up, it's considered a successful test. And if it's a successful test, that's considered, support level. Well, today we finally have broken through that support level and have, gone lower than 76. And unfortunately, now it's considered a resistance level because now we finally busted through support, through the floor support, and it's now called resistance. Now we did have a couple of tests today on that resistance level now 76. Most recently, in the last few hours, it did peak a little bit above 76, poked its head up above 76. It just didn't recover. It's still fairly close though. We're still at 75.9-ish level, just kind of bouncing between 75.9 and maybe 75.95. It's been kind of in that channel now for the last few hours. But today, between 12 p.m. and 1 p.m. Eastern Time, we actually hit the low of 75.76. And that is significantly below 76. It's significant enough to where you would consider that support's broken, and now 76 has become resistance. So now if you think about it as a ceiling, right? So it's not going to be very hard for it to bust through 76. And looking at the chart again on the 6 month, the maximum, just going back to, prior years, this goes back even a couple of years to 2007, which you'll see on, if you can click on your link and show that too. The next stop is 72. That's going to be the last point of, we had support back in, looks like around April or so of 2008. We had the dollar languishing around 72 as well, so that formed a nice support level. So you would expect, just from a technical chart, perspective, that we would probably start to see a decline from 76 down to 72 on the US dollar. And so anyway, it's very interesting news here. I don't know what's going to happen, guys, because at least back then we didn't have, gold and commodities and things like that rising like we do today. Gold today was, let me see here, gold, we hit a high today, as you all know, I'm sure. It went as high as $1,061 per ounce, and man, it just seems like there's just no let up on that. So we have dollar, the dollar's falling, gold is rising. And it's kind of interesting too. It's almost a strange relationship. You have the dollar kind of slowly falling, but then you have gold just, shooting up. It's almost like dollar takes a step back and gold takes 2 steps forwards. It's that kind of relationship. And like I said, we haven't seen that in the past. So that to me would indicate, and it would kind of show a signal that a lot of people have lost confidence in the dollar. So I don't know what this means in long term, to be very honest with you. You would expect, hyperinflation to rear its ugly head. Certainly the equity markets are flooded with liquidity, and that's why you're seeing Dow. Like I said this, a couple months ago. One of my first videos, that we would expect the Dow to continue to increase because there's just so much liquidity in markets, because the banks were given our money, your money, they're giving your money for to show reserves and equity requirements had to be met and that sort of stuff. Well, of course they took that money and went to the gambling casino known as Wall Street with your money. And if they lose that gambling bet, guess what? They're going to come back and ask for you for some more money. And of course our politicians will gladly hand it over. Anyway, that's it for now, guys. Just want to let you know, just keep an eye on the dollar. That's going to be so important. It's going to be so key. Obviously, we've had some interesting developments overseas as far as other currencies too, and that's helping to keep pressure on the dollar. Of course, I know the Australian dollar has been zooming because of they're apparently have a recovery going on too. Of course, that's not tied to USDX, but the Japanese yen has been gaining a little strength too, and euro has been helping a little bit to keep the dollar down. But primarily, it's just people just have lost a lot of interest in the dollar, and I think it's kind of like that 500-pound elephant in the room nobody wants to talk about. I think everybody knows the dollar's doomed, but that elephant's in that room, and if that elephant starts to move around, it's not going to be pretty. Anyway, that's it. That's all I have for now, guys. But keep an eye on that dollar. Let's see what happens, and see if it starts to resume its downward path. I can't see why anybody would buy this right now, unfortunately. So anyway, have a great day, and we'll talk to you guys later. Bye-bye now.